Hello, and welcome back to the channel. I'm Algabot, and today we're taking an educational look at an expert advisor for MetaTrader 5 called RSI Level Bounce. This is a support and resistance mean reversion approach that brings together three ideas: objective horizontal price levels, the relative strength index, and a candlestick rejection filter. Over the next few minutes, I'll walk you through how the strategy reads the market, how it defines its entries and exits, and how the actual MQL5 code behind it is structured. As always, everything here is for educational purposes only and not financial advice. Let's get started. So what does the RSI Level Bounce Expert Advisor actually do? At its heart, this is a mean reversion strategy. Rather than chasing trends, it looks for moments where price has stretched toward the edge of a recent range and then shows signs of turning back. It can be applied to any market and any single time frame in MetaTrader 5, because every calculation runs on whichever time frame you choose at backtest time. The strategy works by building two objective levels from recent price structure. Support is defined as the lowest low over a rolling lookback window, and resistance is defined as the highest high over that same window. By default, that window is 20 bars, and importantly, those levels are measured from the bars before the most recently closed bar, so the signal bar itself doesn't contaminate the level it's being tested against. Driving the entries is the relative strength index, a classic momentum oscillator. The default RSI period is 14, and the strategy uses a distance of 18 from the midpoint of 50. That places the oversold threshold at 32 and the overbought threshold at 68. The idea is simple. The strategy only becomes interested when momentum is already stretched in one direction. On top of that, it adds a candlestick rejection filter. It isn't enough for price to merely touch a level. The strategy detects when a bar pierces through the level with its wick and then closes back on the correct side of it, which suggests the level was defended. This kind of approach tends to suit traders who are drawn to range conditions and reversal-style setups, and who prefer a clearly defined, rules-based framework with fixed risk on every position. It's patient by design, taking only one position at a time per magic number. Remember, mean reversion strategies can and do experience losing trades, especially when a level eventually breaks. So this is presented purely as an educational study of the logic. Let's walk through the mechanics step by step. First, the strategy only evaluates anything on the close of a completed bar. A new bar gate checks whether the most recent bar has finished forming, so the system always acts on settled data rather than a flickering live candle. It also confirms there's enough history for the lookback window and the indicators to warm up, and it checks that no position is already open for this magic number, because it never stacks trades. Once those gates pass, the strategy builds its levels. It scans the lookback window of bars sitting just before the signal bar, taking the lowest low as support and the highest high as resistance. It then reads two indicators on the just closed signal bar: the relative strength index for momentum and the average true range, which measures recent volatility and is used both for a small tolerance buffer and for stop placement. Now for the long side. The strategy detects a bounce at support when four conditions line up together. 1. The signal bar's low pierces into the support zone, allowing a small ATR-based buffer for tolerance. 2. The bar closes back above support, so the level was reclaimed. 3. The bar itself is bullish, meaning it closed above its open. And 4. The relative strength index is oversold, sitting at or below the 32 threshold. When all four agree, the EA signals a buy at the current ask price. The short side is a mirror image. The strategy detects a rejection at resistance when the signal bar's high pierces into the resistance zone. The bar closes back below resistance. The bar is bearish, and the relative strength index is overbought at or above 68. When those align, the EA signals a sell at the current bid. Risk is handled the same way on both sides. For a long, the stop loss is placed below the rejected wick or the support level, whichever is lower, pushed a little further out by an ATR multiple, half an ATR by default. The distance from entry to that stop becomes the measured risk. The take profit is then set as a fixed multiple of that risk, with a default reward ratio of 1.8. The short side simply flips this above resistance. Every trade, therefore, carries a defined stop and a defined target from the moment it opens. Let's read through the MQL5 you see on screen. At the top are the input parameters. Lookback, defaulting to 20, sets the window for support and resistance. RSI period and RsiLevel control the momentum filter, where a level of 18 places oversold at 32 and overbought at 68. ATR period feeds volatility. RsiLevel multiple sets how far the stop sits beyond the wick. Reward ratio sets the target as a multiple of risk, and buffer ATR multiple is the small tolerance for the pierce. Now the long block. The variable tested support is true when the signal bar's low dips at or below support plus the buffer, meaning the wick pierced the zone. The variable reclaimed support is true when the close finished back above support. The condition then requires both of those, plus a bullish bar, plus RSI at or below the oversold level. When all are true, entry is taken at the ask. The stop loss is the lower of the wick and the support level, pushed down by half an ATR, and risk is the entry minus that stop. Take profit is entry plus risk times the reward ratio, and trade up buy places the order. The short block mirrors it exactly. Tested resistance checks the high pierced into resistance. Reclaimed resistance checks the close finished back below it, and the condition adds a bearish bar plus RSI at or above overbought. Entry is the bid. The stop sits above the wick or resistance by half an ATR, and trade.sell sends the order with its calculated target. Both sides share one clean risk framework. Let's bring this to life on the chart, walking through a long trade first, and then a short trade. Across the top you can see two dashed horizontal lines. The lower green line marks support at 1.0830, the lowest low over the recent lookback window. The upper red line marks resistance at 1.0900, the highest high over that same window. Below the price, the gold line is the relative strength index, with its oversold band at 32 and its overbought band at 68. Watch the opening candles. Price starts up near the middle of the range and begins drifting lower, candle after candle. As it slides down toward the support line, notice the RSI in the lower panel falling with it, sinking from the upper 50s down through 40 and toward the oversold band. The strategy is now paying attention because momentum is stretching to the downside. Then comes the key candle, the one at the buy entry marker. Its wick dips down and pierces below the support level at 1.0830, but look at where it closes. The body finishes back above support, and it's a bullish bar that closed above its open. At that very moment, the RSI has dropped into the oversold zone beneath 32. All four conditions line up. The wick pierced the level, the close reclaimed it, the bar is bullish, and momentum is oversold. The EA signals a long at the buy entry marker, and the stop is tucked just below that rejected wick. From there, price turns and climbs. The next candles push higher, away from support, and the RSI lifts back toward the midline. Price keeps advancing until it reaches the take profit target marked above, which sits at the fixed reward to risk multiple of 1.8 times the measured risk. The long trade is complete. Now the market keeps rising toward the upper boundary, and the setup mirrors itself. Price presses up into the resistance line at 1.0900, and in the lower panel the RSI climbs through 60 and pushes into the overbought band above 68. Then the sell entry candle forms. Its wick pokes above resistance, but the body closes back below the level, and it's a bearish bar that closed beneath its open, while RSI is overbought. The four short conditions are satisfied, and the EA signals a sell at the sell entry marker, with the stop placed just above the rejected high. Price then rolls over and falls. Candle by candle it works lower, away from resistance, while the RSI eases back down out of the overbought zone. The move continues until price reaches the lower take profit target, again set at the same fixed reward to risk multiple of the measured risk. That completes the short trade. Notice how both sequences follow the identical logic in opposite directions, a level defined by structure, a wick that pierces and is rejected, a candle that closes back inside, and stretched momentum confirming the turn. Of course, in live conditions a level can eventually break instead of holding, which is exactly why each trade carries a predefined stop from the start. And that brings us to the end of our look at the RSI Level Bounce Expert Advisor. Today we covered how the strategy builds objective support and resistance from a look-back window, how it uses the relative strength index to gauge stretched momentum, and how it demands a genuine candlestick rejection before signaling a long at support or a short at resistance. We also read through the MQL5 code and watched both sides play out on the chart, each with an ATR-based stop and a fixed reward-to-risk target. Remember, this video is educational content only and not financial advice, a recommendation, or a solicitation. If you found it helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like to see next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.